Well, for more on where these currency tensions could take us, we're with FXCM technical currency strategist Joel Kruger. He joins us live now from Tel Aviv. Thank you very much indeed for speaking to us. So what is the fallout going to be from this lack of cooperation, friction even on currencies between the world's largest economies?
Yeah, it's a good question. I think that if we saw anything from this weekend, obviously it was just sort of a political finger-pointing session in which the managing director of the IMF said himself that it was pretty inefficient. But I think that if we're going to look at some productive elements from this weekend, we can see that there was an agreement for some form of coordinated effort at some point on behalf of the G20, and there was somewhat of a diffusion of fears over an all-out currency war. So I think that's good. So as far as where we go from here, I think there are risks for a little bit more of a dollar depreciation. More back into focus now is the Fed quantitative easing issue. And then we'll see where we go from there.
I mean, we had the usual US-EU criticism of China's currency policy. To what extent do countries with undervalued currencies, with a lack of domestic demand, if you like, pose a threat to the global economic recovery?
Another good question. I think that the issue with China right now, it's been an ongoing issue in the pressure for the Chinese to appreciate their currency. But I think that we're seeing this highlighted more right now, really more as a function of the dollar weakness. The key here is the dollar right now, and the broad-based weakness in the dollar is putting pressure on the global economy. Of course, a lot of the economies rely on a stronger dollar, so the depreciation in the dollar is just highlighting the yuan weakness right now. So that's what we're seeing. But ultimately, I think really this issue is more just politics. Obviously, we have midterm elections coming up. Obama approval ratings are lower, and unemployment remains high. So this is going to be a topic that people are going to look to discuss right now. But ultimately, I don't think that anybody believes that while it's necessary in appreciation in the yuan, I don't think anybody believes that that's really going to solve the U.S. problems at this point.
And you mentioned depreciation of the dollar. Is that likely to continue as speculation mounts that the Federal Reserve will buy more government debt? And if so, what does that mean for everybody else?
Interestingly enough, the market has pretty much, I believe, priced in a good deal of quantitative easing too, even though we haven't even seen it yet. So I think at this point, if you take a look at a lot of the major currencies against the U.S. dollar, they're very overextended right now. And in fact, the last time we saw the announcement of the first quantitative easing measures, once it officially was implemented, we did see broad-based dollar appreciation on sort of a buy the rumor, sell the fact. And I think that we're on pace to see that again. I think that the risks over the shorter term are for some dollar appreciation. Again, if you look at the yen, if you look at the Australian dollar, the euro's been driving higher, and I think that if we get up with the euro up above into the 142, 143 area, the risks are for some dollar appreciation over the short term.
Joel Kruger, FXCM technical currency strategist. Thanks very much. Good to talk to you.